Welcome back, everyone, to week 33. A very similar week in many respects to last week, and it feels like, oh boy, did I have a lucky few months to be exceptionally busy because there's not much, at least in the price action of a lot of things, not much new going on super recently, and there's not many big fundamental shifts. So I'll get into some updates and should be, I think, a quicker one this week, but we'll see. Okay, so what happened this week? Well, stocks were flat, commodities were flat, mostly. Bonds were flat. Yeah, everything there wasn't much moves. Gold did try and break out and it, for the time being, failed. Um, as I mentioned last week, I think, and probably in the past as well, the next $20, $30 upside for gold will be tough. So that's why I'm not buying more at this point. Um, so yeah, fake breakout, fake breakdown for different things, but mainly everything this week has been sideways. Bond market still really, really wants or needs its rate cut. Will it get it? Well, we'll see. I don't know about June. I'm not believing it will necessarily happen in June, but maybe later in the summer. That's what Gundlach said. He's a smart guy, smarter than me at least. But I don't have a strong view on when or if that'll come, but we'll see. Now, by a whole number of historical measures, commodities are inexpensive relative to equities. Now, the one thing I wanted to point out this week, and it's along the same lines of why do we have months, years to slowly buy and accumulate uranium equities, for example, is that it is because, in my experience, the market, it can remain expensive, it can remain cheap for a long time, especially with juniors. You see this all the time. The market just wants its catalyst. What is going to make things change? To that, my belief is that if we head into a recession, doesn't have to be a bad recession, but if we head into a recession, that will basically catalyze all of the negativity to just happen at the same time. At which point, it really can't get much worse for a bunch of commodities. And that's when I think that if that happens, if we get there, I personally want to be buying industrial metals, copper, nickel, lithium, whatever. A whole bunch of industrial and battery, and for the next decade, oil maybe too. Just buy all of the things that are economically focused. And that is where the point that I believe we might hit peak pessimism. And from there on, we can have a commodity cycle. Now on to the stock accumulations for the week. Again, not much new here. We're going to start off with Bannerman, which is again a very large but higher cost almost production ready deposit. Then we again have our hedge of NextGen, which is probably a good number of years out, but the next biggest mine in the world. Next biggest uranium mine in the world, I should say. And lastly, we have another higher cost but almost ready project, which is owned by GoviX. Again, as always, here's a look at the portfolio, and I know there's a lot of people that like to say the market doesn't give you plenty of time to buy things that are cheap or sell things that are expensive, but nothing's happened for a while, and maybe that means that some of the things we've been buying aren't as cheap as I believe they may be. But I still think the fundamentals look good, and I'm still buying. And yep, we'll see how it looks in a few years. I think I think we'll look back on this and say, wow, someone missed something, whether it's me or the market. Who knows? But with that, I hope everyone found something useful with watching this video, and I will see you next time. Have a good one. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.